Good morning, everyone. Hope you're doing well. Andy Tuttle here with the Tuttle Group at Fairway with your weekly DFW mortgage market update. I hope you're getting ready for a great Memorial Day and enjoying the weekend. I know it's a great time to barbecue and get out there and also remember the veterans, right? I mean, that's the reason we get to do all this, and I got to send you this video and we get to sip on our coffees and have our steaks and grill out and all that stuff is because men and women have fought every day and still do for our freedom. So remember them today and love on a veteran if you know any or know someone that has lost one. So appreciate you listening to this. Let's get to it. This was a big week. This is also Memorial Day, the start off of the summer, right? The housing market is in full swing and it's going to just get busier. So a couple of stats that I think will be helpful for you and it may be interesting for you to get your mind right about going into the summer. A lot of you have already made a ton of offers or are right in the fight and are struggling to see if it's worth it to stay with it. Well, a couple of things to remember. One, appreciation, especially in DFW, is 6 to 8% still. It's forecasted to be in that range again this year. Freddie Mac just changed their housing outlook. They have been saying up until this month that this would be a below average housing season. They have done a 180 on that and say now it's going to be the best housing season in the last 10 years. We also had a housing report this week that missed on some things, but overall shows that our average days on market is the best since the National Association of Realtors has been tracking this in 2011, starting in 2011. It's at 29 days. That is fast. That's why you're seeing a lot of tightening out there, but that is good for you because it means we are the economic news, the jobs report, everything is working in tandem with that, showing that we are seeing real reason to see improvement because jobs are doing better, the economy is doing better, the stock market shows that as well. So these are good things for you out there in the marketplace. And bonds held up actually reasonably well considering what the stock market did this week. So if you take a look at the charts here, remember this is a price chart, so the higher the price, the lower the rates. On the 17th, the DC leaks came out, more DC leaks came out, and we saw a price bump up just a little bit and now put us in this trading range. And even though stocks continued to have winning days every single day, we saw the bonds up hold pretty well to that. Now here's one thing you got to watch. And one of the reasons is because the Fed came out this last week and put out their plan for quantitative tightening, basically getting some of these bonds that they've been buying for the last decade off of their books. And they gave a best case scenario for that, basically putting caps in place, saying that it will be tapering. They're not going to stop buying altogether. They're just going to slow it down based on what the economy is doing. And so the bonds like that news and help them stay buoyed this week. One thing you need to watch out for technically is this blue line here. This is the 200-day moving average. Historically, it's a very hard line to cross over. It's a very big ceiling of resistance, and if we do cross it, it becomes a very strong floor of support. So it's going to take a lot of economic news, basically a bad jobs report next week, to get us probably above this line, but we do have room to the downside. So here's what that means for you. You're out there shopping for a house. Just know that right now you have the same or better rates if you've been pre-approved pretty much any time in the last 90 days. So that's good news for you, and you just need to watch here this week while you're making offers. The market's going to be closed on Monday. It's not going to open until Tuesday. You could be anywhere within this range. So most likely getting the same rate or better than you were pre-approved at. It just may cost you just a little more in price to get that rate. So not much. You're in a safe spot right now unless something crazy happens geopolitically. So get out there, go make those offers on homes and stay in the fight. Great for appreciation. There's a report card that I'm attaching to this for you so you can see kind of where the housing market is right now. Whatever we can do to help with your pre-approvals, your offers, whatever you need, we want to be here for you. So stay in the fight. It's going to be worth it. Get what you've working with great realtors and call us if you need us. Happy hunting.